The world's largest database software vendor will release earnings after the bell Thursday. Now, last quarter, the company missed estimates on sales as well as profits. So what does the future of Oracle look like? Now, with us now to talk about the whole situation with Oracle is Scott Kessler, equity analyst at S&P Capital IQ. And let's talk about this, Scott, because you mentioned Oracle's revenue growth is limited at this point. Talk to me about Oracle, the company. You compare it to another big tech giant, that's Big Blue, IBM. How do they compare? What does it mean when you compare Oracle to IBM?
Right. Well, I would argue on some levels Oracle wouldn't want to be compared to IBM because at this point, IBM has kind of absent growth. They've levered up substantially to basically buy back substantial amounts of stock to help EPS increase over time. But to be frank, it seems to us like Oracle is not too many steps behind IBM in that kind of pattern. And so what we see is basically over the next couple of years, mid-single-digit revenue growth, but EPS gains being fueled again by stock repurchase activity, which has been substantial, particularly over the last couple of years. The big challenges we think for Oracle are relatively well understood. You know, you mentioned the database business and they're still dominant there, but it is largely a mature business. Applications once thought of as the growth engine for Oracle really has turned out to be less of a growth business than they expected, and they're facing substantial competition from a variety of cloud players.
Gotcha. So let's talk about that, because when we talk about big software and services providers, the mega cap companies like an Oracle, like an IBM, the growth is coming from the cloud. That's where a lot of these CEOs are placing their big bets. Oracle's cloud subscription sales grew on a year-over-year basis. It did grow, however, not by as much as like Salesforce.com or an SAP. They both grew their sales by more than 20%. So what did Oracle do differently than, say, an SAP or a Salesforce.com?
Yeah, I mean, I think when you look at Salesforce.com, I mean, Oracle and Salesforce have had kind of an interesting back and forth over the years. And I think it's fair to say that even though both are kind of thought of in the large cap software space, the reality is that the companies and their growth profiles and their valuations are completely different. So you look at a Salesforce, for example, I mean, they've been generating top line growth above 30% for the last, I'd say, number of years at this stage, where Oracle is struggling to get even to a double-digit level. And the other thing to keep in mind is that I'd say Oracle years ago, a few years ago, did a couple of relatively large cloud deals, but it doesn't seem like those have panned out as they would have expected. And Oracle has done, I think, what is it, $4 billion acquisitions since the beginning of 2013, but it doesn't seem like those have helped much when it comes to growth as well. In terms of SAP, I think the way that we think about it is SAP has been doing some acquisitions as well. They've been investing very aggressively, and I think they're very similarly situated and positioned companies.
Gotcha. Now you mentioned this idea of size and growth not becoming easy. To me, that sounds like a lot like a utility company, right? So Oracle, is it fair to explain Oracle becoming more like a utility company when it comes to technology, software, and services? If so, I mean, what does it mean for a company like that, like an Oracle?
Well, there's no question. It's interesting. Over the last number of months, we've kind of gotten the impression that the investing public at large has grown increasingly interested in a lot of these large cap technology players because they have some growth in most cases. They have strong and flexible balance sheets. They've been buying back stock, and they've been paying and increasing their dividends. But guess what? It seems like for a lot of these companies, kind of the bloom is off the rose when it comes to substantial growth. And when people think about these companies, I would argue they think about them more in the context of platforms and just enabling their businesses to operate on a day-to-day basis, much like utilities that allow, whether it's businesses or individuals, to access water or electricity, do what's necessary on a day-to-day basis. So what's interesting is when you look at the growth profiles, when you look at the inclination to basically raise debt to buy back shares and pay dividends, it seems like we have kind of somewhat similar stories here. And I would argue Oracle is kind of becoming more of a type of company that's about value than about growth. And it's something I think investors need to be aware of as they think about the technology sector broadly and Oracle more specifically.
Gotcha. All right, Scott, thank you so much for bringing us your views and expertise on what's going to happen with Oracle. That's something you're going to definitely keep an eye on tonight. Now, thanks for watching. I'm Dominic Chu. Have yourself a great day.